Hello, ladies and gentlemen. This is Dean Barwick, your host for the Money Talk Show. Hey, we're really excited. We're moving along today in our series on Social Security maximization, how to get the very most out of your Social Security benefits. Now, before we move forward, I'd like to tell you a little bit about myself. I am the president and founder of Acquire Capital Management. We are a registered investment advisory firm here in the state of California. Now, we do all of our broadcasting through the Money Talk Show, and they broadcast all over the world through the internet. Now, if you're in the 50 United States and you'd like to get some more information on any of the topics that we've discussed, go to the Money Talk Show, ask a question. They'll get right back to you with an answer on that. Also, if you're looking for an advisor and you'd like to talk to somebody to discuss some of the topics that we bring up here on the broadcast, go to the Money Talk Show. They've got a phenomenal advisor referral service. They work with really, really good fee-based advisors all over the nation, and they'll help you get a good fit there. Hey, and if you're in California, they might direct you to us, so that'd be great too. Also, if you're interested in getting more education, finding out more about your options in the financial services, hey, they've got these financial workshops they put on, they host them all over the United States. There are financial professionals that teach them. They're free to you, and there's no business being conducted. They are not selling products. These are literally a resource tool for you, and we highly recommend, if you can get to one, to take advantage of that. Anyway, hey, let's move on. Today, we're talking about taxation and managing the impact of taxes and choosing to work. Very important topic. So let's move on to this next slide. Now, you see these Social Security checks here. I'll tell you, it seems unfair. You spend a lifetime paying into Social Security only to have your benefit be taxed when you start receiving it in retirement. Now, with proper planning, there might be a way to reduce or eliminate the tax that you're paying on your Social Security benefit. Now, as much as 85% of your benefits may be subject right now to income tax. So nearly every source of income is included: your wages, pensions, dividends, capital gains, business income, tax-exempt interest. So we have to look at all of that. So let's go ahead and touch bases and see what we can find out today. We'll move here to the next slide. Now let me ask you, how do you earn more than $25,000 a year, yet shelter your Social Security benefits from taxation? Now, the answer is to recognize that there is an exception in the IRS calculation of total income. Deferred annuity interest is not included in the year that it's earned. It's included in the year that it is withdrawn. So you can position assets into annuities and defer the interest earnings until you actually choose to withdraw them. So in other words, you've got that tax deferred program going on in your annuity, and while you're pulling out your Social Security, you don't have to include that tax deferred earnings in your income for that year. So it doesn't affect the taxation on your Social Security. It's important to know that. Now, you can position assets into annuities and defer the interest earnings until you actually choose to withdraw them. Now, by doing so, you defer income taxes on your interest earnings. You could reduce or eliminate income taxes on your Social Security benefits. Now, living off her Social Security and pensions, saving her savings for a rainy day, and facing increasing cost on an income-fixed medical expense and food and gasoline. So let's take a look at that. Now, we've been talking about the our couple, and let's look and see what Mary has. We have Social Security of $10,000, pension of $18,000. Taxable interest of $20,000, which we're able to defer that. So income taxes paid before we did the deferral was $5,536, but after we did the deferral, the income tax was only $801. You're looking at the chart here, and this, of course, is for Mary. repositioning her rainy day funds into an annuity saved Mary $4,735 in income taxes. And that's just 1 year. So that could really add up to a lot of money. Now, again, this is something that if you would like to get more information, go to the Money Talk Show and fill that out. Ask a question, maybe request an advisor in your area that you can actually discuss this with, because this is a dynamic principle that if it's done correctly, and that's the key word there, is correctly, you can save a lot of money legally on your taxes. So why pay more than you legally have to pay on your taxes? Okay, now let's take a look at choosing to work. Now, the AARP found that 80% of baby boomers plan to work during retirement. And I've got to tell you, folks, I've got a lot of clients who don't want to retire, and it's not that they need the money, but they've got active minds. They have passions in their life. Sometimes they're becoming consultants in the same field or industry they worked in the past. Sometimes they're changing it completely and doing something they've always wanted to do. So you have to look at what the effect of working during a retirement can have on your Social Security benefits. Now, and again, what effect will that have on your net income? And that could have a lot to do with the taxes. Depending on your age, it could cost you up to 50% of your benefits. Now, if you file your benefit early and then continue working, then you could lose some benefits until you reach your full retirement age. If taking Social Security benefits 1 or more years before full retirement age. Now, the Social Security Administration deducts $1 for every $2 earned in excess of $14,640 annually or per year. Now, if you're taking Social Security benefits less than 1 year before full retirement age. So that's important to keep an eye on. Now, Social Security Administration will deduct $1 for every $3 earned above that earning limit, and that's important to know too. So if you reach your full retirement age in 2013, the earnings limit is $38,880. Once you've reached your full retirement age, your benefits will no longer be subject to these reductions. Okay? Now you can earn as much as you want penalty free from that point on. So you really got to sit down and structure that out if you're going to continue working. It's really important to do. That's why we always recommend, hey, go to the Money Talk Show, fill out the Ask a Question, but I would recommend getting a hold of an advisor in your area that can go over this with you. Now, we're also offering this report on the Social Security Maximization series on the Money Talk Show. So, and you can write these down when you ask the question. They don't have it up right now, but they are putting up an interactive form that will have a list of all the topics that were important to you through the whole series, so that they can put together a complete report for you. So that should be up soon. In fact, by the time you're listening to this, it may actually be up. I don't know. Hey, let's move on. Let's do another money question. We love doing these money questions. It kind of helps us refresh this. And, of course, it's the title of this is, what do you know about Social Security? So the question is, let's just pretend like you've already elected your Social Security benefits, and now you realize, whoops, I made a mistake. What are your options? So maybe you're listening to us today, and you've already made your Social Security elections, and now you're listening and thinking, ooh, hey, I could have done it different, and I may be losing a lot of money. What are my options? Well, here's the answer. If you change your mind within the first 12 months, so it's not a calendar year, it is within the first 12 months of electing benefits, you can withdraw the application and pay back any benefits. And then do a re-election, do it differently, okay? But the key there is 12 months, not a calendar year, and you got to pay back the benefits. But hey, you might find that doing that might increase your lifetime benefits, into the $100,000 range and up. So that might be something you want to look at. Anyway, hey, this is Dean Barwick with the Money Talk Show. I know it's been a little short today, but it was some good information. please get a hold of us at the Money Talk Show, and we will help you in any way we can on any of this material. Again, the financial workshops, the advisor referral, ask a question. But until next time, America, you have a great day, and we hope to talk to you soon. Bye-bye.